Jordan, let me start with a little bit of ancient history. What did you learn from Christine Lagarde yesterday that gives you strong euro in the future?
Well, Tom, for anyone who's holding a short euro position, the past 2 weeks has been a left-right hook. You had the EU recovery fund, and even I said it's not enough. Then you had the German fiscal stimulus this week, and then yesterday was the hook. It was the ECB. And what really changed, Tom, was the correlation of the markets to quantitative easing. In the past, when you had QE, it was a sell euro story. It meant lower yields, it meant outflows from the euro area into US, and that would be dollar strength, euro weakness. But going into yesterday, we said to our clients, it's a different ballgame. The QE will actually lead to higher growth expectations after a very long period, Tom, months now, of European equity outflows by foreign investors. And we said, if we get a bigger than expected QE program, which we did yesterday, if we got that, then we'll see inflows into European equities, and banks will outperform as well. And we're seeing all of that play out, Tom.
Right. Now, Jordan, on Jobs Day in America, we don't do Lagrangian functions, but I am going to ask you to triangulate the three major pairs. We've got a stronger euro, we've got dollar ambiguity, and even greater yen ambiguity. Triangulate yen, dollar, and euro 6 months out.
So, Tom, I think we're going to have a recovery phase 6 months out. I think that's easier to talk about. There is the risk of a second wave in between then. So the 3-month view is still cloudy, but in 6 months' time, investors will be thinking, okay, where are we with the recovery and which currencies should underperform and outperform? And the yen has the Bank of Japan on the accelerator. Whenever things get tough, whenever you have yen strength, Bank of Japan will talk down the currency and look to do something such as expanding ETF purchases, for example, to weaken the currency. When it comes to the euro, it's a different ballgame, as I mentioned. The expectations for growth in Europe are improving, and we've had pretty much months and years of underweights in European equities, and I think that might start to flip for the first time. Then when it comes to the dollar, Tom, I had been a dollar bull up until very recently, and what's changed, I guess, is because what's happening now is the Fed has done so much in terms of expansion of its balance sheet, and also the double deficits in the US have expanded so much as well. There's going to be a lot of money in the US that needs to go somewhere, and we've had all of the good news for the dollar over the past couple of months, and it hasn't strengthened as much as I hoped. Now we're getting all the bad news for the dollar, such as a recovery in Europe, and I think that will have legs. The dollar should sell off, Tom.
Jordan.
We're looking at euro breaking 113 to 115 in the next couple of weeks.